traders nailed it earlier in the week, right? Risk on, risk off, risk on, risk off. And this is what we're going to see as we exit Q4 earnings and we start heading into this gray area of, okay, we reached the Dow 14,000, we reached SPX 1500. What next? And what next is sequestration and a continuing resolution debate in March. So the market's going to see these triple-digit up and down days as it searches for direction. And today, mainly seeing some down direction out of weekly jobless claims, right? So weekly jobless claims came out and a little higher than expected, but we saw some not too bad numbers out of non-farm productivity and also unit labor costs. What else happened today is over in Europe, right? Europe, the ECB met, they left rates unchanged, but more importantly, Mario Draghi, the president of the ECB, said that he's standing by to do whatever is necessary. However, it's not looking so good. The economic risks are more skewed to the downside than to the upside. So obviously the market over here is going to look for an excuse to sell off because I think it's overvalued as it is, and we need an excuse every once in a while to sell off. Days like today, like we talked about on Monday, fine, absolutely great in our model portfolios. Why? Down triple digits and down 11 on the SPOOs, and here are our hedges kicking in just as designed. We have volatility hedges, hedges on SDS, that's the ProShares Ultra Short S&P, which goes up as the market goes down. So seeing a nice gain of about $1,400 in our model portfolio, one of our model portfolios today. And as you can see, this is what your portfolio should look like, folks. On a day like today that's down, you should see some bright greens, some light greens, some pinks, and some reds, right? That's what we mean by a hedged portfolio. So you can sleep at night. So you really don't have to stay up at night worrying, well, what's going to happen in tomorrow's market? Well, you should be secure in the fact that your portfolio is going to be okay because you manage risk. And our newest trading service, Trading Weekly Options, is having an absolute incredible week. I think we're going to see profits this week of about $2,700. We have 3 positions in our model portfolio. Let's take a look at how we're performing for the week here. We have 3 positions on Apple, Goog, and the SPX. So let's take a look at how we're doing this week, Monday through today. And there we go. We're up about $2,000 in 4 days. So that's some pretty superior execution, folks. And this service started in the middle of December. So middle of December, let me throw up since inception up there. So middle of December, we're averaging about $2,000 in gains per week in our weekly options service. And if you want to give that a test flight, all you have to do is go to topgunoptions.com, hover over services, and you can go down to weekly options, or you can just type upstairs there, topgunoptions.com/weekly-options, and you can scroll down and take a test flight with us for 2 weeks. However, warning. Weekly options are afterburner trades, folks. They're not for the faint of heart, and this is why you need to train, and this is why we use paper trading accounts, because it's like hitting the simulator building for a pilot. You don't go airborne in a real aircraft and give yourself engine fires, right? That's just obviously unrealistic. You do that in the simulator building. So you really have to learn how to trade weekly options, because when they're working for you, great. When they're working against you, they're going to leave a mark, okay? So market's down today. Again, we're searching for a reason as we, again, I used this analogy the other day in one of our live trading sessions. Whenever the market gets to one of these 1,000-point intervals, and Schaefer's had a great report on this, the performance over that following 52-week period is about -3%. So it literally is like getting to, hopping in an elevator, getting up to the 14th floor, looking around after being all excited and realizing the floor is not complete. And wondering, okay, well, what's next? Should we go down to the next floor until this one's complete, or do we start working on this level? So that's kind of the analogy, is we're going to wallow around here, whether it's Dow 14,000 or the SPX, especially as we go into sequestration and the continuing resolution fights in March. It's going to get ugly, folks. It's really going to get ugly. Both sides are staking out their grounds, and I think this is going to be John Boehner, Speaker of the House, his last stand. He folded like a cheap suit over the fiscal cliff. He folded over the debt ceiling. He's not going to fold over this. So get ready for battle, and we're ready for battle in our model portfolios because we have hedges on that are meant to protect us no matter what. Okay, got to run. Happy hunting. Make sure you hedge, and I'll be back tomorrow with our Friday market wrap-up over at Wealth Creation Investing. We'll see you.